Here's how you read a loan estimate when a mortgage loan officer sends you numbers as far as what your new home is going to be like or your refi. All right, so when we come to the loan estimate here, you're going to see these are all going to vary a little bit, but it'll be in this format. And how you can read this real quick is that the loan term is right here. This is how long the mortgage is going to be. The purpose of it is a purchase on this one. If you're doing a refinance, it'll say refinance or cash out refi, whatever that might be. And then the product, you'll know here, fixed rate. You'll know that the interest rate is not going to change with this one. The loan type on this loan type, this one in particular is a VA loan. VA loans are for military veterans that earn that benefit. And then you'll see the rate lock here, yes or no. In this case, this one is showing that the rate has been locked. It has an expiration date on that as well. That is very, very important when you are comparing between different lenders, is to see if that rate is actually locked by the lender, or are they just sending you a loan estimate and it's not locked. That means that it can change at any minute. Usually changes once a day, but it can actually change during the day multiple times depending on the volatility of the market. But if it's a rate locked here that says yes, then that means that it's locked and they have to go forward with that rate. And then you'll see the sales price here. That's what you're purchasing the home for. You'll see the loan amount here. That's what the loan amount's going to be. Interest rate, as we talked about that, that's the interest rate there that's been locked in. Monthly principal and interest is just for the repayment of the loan, like just for the repayment of the loan itself. That's it. It doesn't include like property taxes and insurance and even like mortgage insurance. That's also called PMI. That's more broken down here as far as what your actual total payment is looking like if you are including property taxes and insurance and PMI into your monthly payment. And then you'll see here as far as the estimated insurance, property taxes, and everything, this is included in this number above here. And this is just breaking down what is actually included in the escrow. Escrow is basically like a bank account, as I describe it, for your house. And that money is included in your mortgage payment to pay for property taxes and insurance. And then it's going to go into the escrow account. It's like your bank account. And then when those bills are due in the future, the mortgage servicer is going to take care of those bills for you. So you can just pay on a monthly plan, and it's two less bills that you have to pay attention to on an annual basis. Closing costs here, I don't like this personally, my opinion only. As far as like the total estimated closing cost, this does include like prepaids and stuff like that, like your first year of homeowners insurance, things like that. So that can be a little misleading. But as far as like what you are estimated needing to bring to closing, that's what cash to close is here, 2838. That is what the lender is estimating that you are bringing to closing. Something as far as that number goes, let's go down here to the second page. As far as that number goes, we just got to make sure that these numbers all make sense, because lenders can screw this up front, and it could definitely change in your final numbers. So as far as the section A right here, this is what the lender is charging as far as fees go. So the higher that those fees are, not probably as good of a deal. But this is pretty typical here as far as an underwriting fee, around $1,000 or so. Some might put it as a lender fee, an administrative fee, something like that. So section A, and then also section B is something to always pay attention to as far as when to compare apples to apples with different lenders and everything. These two boxes right here, A and B, are going to be the ones as far as trying to figure out which one is actually a better deal, because you might run into a scenario where someone has a higher interest rate and less fees. You might run into someone that has a lower rate and higher fees. So you just got to pay attention to the A and B here. In this case, it looks like there's a lot as far as in section B on this one, because it is a VA loan. These have this extra like $7,000 fee in there. That's a percentage as far as what that loan amount is going to be that I put on the page before. That is rolled into the loan amount. So if you notice maybe on the sales price up here, I'll show you. Sales price is $338 on this one, and then the loan amount is actually over that amount. That's because that VA funding fee is actually financed into this deal, and that's very, very typical. So that's going to make this number in this case look a little bit higher. But you're going to look at your like appraisal fees; those are going to be roughly the same. Credit report fees, that's roughly the same. and then all these little fees from here. As far as that cash to close number again, as far as comparing, it's a hard one to do, and that's why I always say just look at the interest rate in section A and B, and that's because that cash to close number can vary quite a bit, and that's get down to here, section C. These are estimated title fees. Every lender is going to put something different as far as what they're estimating those title fees are going to be. It's up to you or the seller or your realtors as far as picking that title company in that transaction and what that title company charges. So that's what you're going to run into there. The recording fees for the state, that's pretty typical standard right there. It's going to be roughly around there. So that's not going to change. All lenders will have that same one within like maybe a few dollars or so. And then as far as the prepaids, that's going to depend again. What are they putting in as far as a monthly estimate for home insurance? That's something that you pick. That's something that can change your cash to close number when you're comparing and shopping around with different lenders, because you are paying for the first full year of your homeowner's insurance policy right here. That's a part of a closing cost. That's what skews that number of cash to close when you're comparing lenders. Again, stick with A and B. That's going to be your determination on which option is better. And then also another big thing that can change, you might see someone trying to make their numbers look better, and they're going to put 1 day of prepaid interest. That's if you close on the last day of the month. If you close on the beginning of the month, that's going to be 31 days, and then this is going to go up quite a bit. So that's something to always look out for. And then again, back to this homeowners insurance and property taxes. Another thing where people make their numbers look a lot less is they'll put 2 months and 2 months. Home insurance, it's going to be 2 or 3 months, just depending on when you close during the month and all that. But depending on during the year and depending on your state that you live in, when property taxes are due, they're going to have to put in there enough to make sure that they're going to collect enough at closing and put it in an escrow account, so that account has enough when those bills are due to pay that bill and not go into a negative status. Like a bank account, like if it wants to negative, that's not good. So we need to make sure, I say we, the title company and the lender, will actually raise that if according to when you're closing and things like that. So that's where a lender on a loan estimate could put 2 months, 2 months, and make this look good, and then make your cash to close look good and everything. And that's all skewed and everything, because that's not what it's going to actually be like in the end. Another thing would be to look for is maybe like lender credits. On this particular one, there's no lender credits, but that's where that would be. Back again down here in the bottom right, total closing costs. That's what we saw up here above at the 14,000-ish. You can see that's the total there. This is kind of breaking down. It's minusing or subtracting that VA funding fee that's on this particular one. The deposit, that's also showing a deposit for earnest money. When you put an offer in a home, you got to put a deposit down. That money is going towards your cash to close or like your down payment or closing costs. So you're not losing out on that deposit money. They're giving you a credit for that. Another thing would be on the down payment. This is a VA loan, so he's putting 0% down. So that's $0. This would state where your actual dollar amount for your down payment is, not your percentage. Another thing would be is seller credits. This is down here. If you had a negotiation on an offer that you're asking the seller to pay for some closing costs, that would be here as well. And then this is the breakdown of how they get that cash to close number. So that's how you can see the differences and how that particular loan officer that's helping out as far as getting those quotes and everything, how those numbers can be very skewed and everything. The best thing to do is just to check section A and section B, and that's how you can compare in the long run as far as what that's going to look like, as far as comparing apples to apples with all those lenders that you're shopping with. So again, that's how you can look as far as an LE. I'll try and do one that's side by side so we can kind of see like the differences between two companies. But that is how you read a loan estimate, in particular for this one, a VA loan. Let me know if you have any questions, and use a mortgage broker.